The Global Currency Shift, a Confluence of Events. Introduction. In this emergency podcast, we delve into the rapidly changing economic landscape and the confluence of events that may lead to a significant shift in the global financial system. The discussion centers around the potential announcement by the BRICS nations of a new currency backed by gold, and its implications on the world's reserve currency and the international monetary system. The BRICS nations and the gold-backed currency. The BRICS nations, Brazil, Russia, India, China, and South Africa, are rumored to be on the verge of announcing a new currency backed by gold. This move is anticipated to be a significant challenge to the existing global financial order, potentially replacing the current world reserve currency. Jim Rickards, an insider with extensive experience in the financial world, has been closely following and discussing this development for some time. The anticipated announcement is slated for August 22 at a BRICS meeting in Johannesburg. The struggling banking system. The underlying problems in the global banking system have not disappeared, and this adds to the urgency of understanding the potential impact of the BRICS nations' currency announcement. The forces of de-dollarization, coupled with the vulnerability of banks, could exacerbate the situation and drive countries to seek alternatives. Weaponizing the dollar. Historically, the US dollar served as the world's reserve currency, intended to be neutral like gold. However, recent actions, such as sanctions and exclusion from financial systems, have turned the dollar into a tool for wielding geopolitical influence. This has led many countries to consider alternatives outside the Western system. The alienation of Saudi Arabia, a significant player in the petrodollar system, has further complicated the situation. Saudi Arabia's partnership with Russia and their interest in the BRICS gold-backed currency has potential implications for the global economic balance. The energy crisis and inflation. The decisions made by the Biden administration have inadvertently contributed to the energy crisis and surging inflation. The cancellation of the Keystone XL pipeline and other measures have led to energy scarcity and rising costs. Inflation, which is fundamentally an increase in the money supply, has been exacerbated by economic policies, impacting the global economy. The debt dilemma. The United States faces a dire financial situation, with student debt accounting for a significant portion of its assets. This growing debt burden, amounting to trillions of dollars, raises questions about how it can be sustained and repaid. The 2022 balance sheet of the U.S. government reveals assets of $5 trillion, with 42.3% represented by student debt. In contrast, liabilities amount to a staggering $151 trillion. The motivation behind the actions. The motivation behind certain decisions, including the handling of the dollar, may lie in the recommendations of key economic advisors. The chief economic advisor, Jared Bernstein, has advocated relinquishing the world reserve status of the US dollar, indicating a shift in economic philosophy. The mounting debt and challenging economic situation may prompt policymakers to explore alternative paths and potentially restructure the global financial landscape. Conclusion. As we approach the potential announcement of a gold-backed currency by the BRICS nations, the world is on the brink of significant financial change. The struggles of the banking system, the geopolitical tensions surrounding the dollar, and the mounting debt dilemmas all contribute to a complex economic scenario. Understanding these interconnected factors is crucial for individuals and nations alike, as they navigate the uncertain waters of a rapidly transforming global economy. The impending global currency reset, a deep dive. Introduction. In this comprehensive analysis, we delve into a critical emergency podcast discussing the potential for a global currency reset. The transcript covers various topics, including the excessive printing of money, the growing debt crisis, the weaponization of the US dollar, the prospect of a gold-backed currency, and the implications of a reset on the global financial landscape. The unprecedented printing of money. Over the last several years, the United States has engaged in an unprecedented money printing spree, surpassing any historical precedents. The resulting consequences have led to several problems and distortions in the economy. The fundamental question arises: how can a country escape from the consequences of printing over $151 trillion in debt with only $5 trillion in assets? The rising debt dilemma. The staggering debt-to-assets ratio of the United States poses a severe challenge to its financial stability. With liabilities far outweighing its assets, the country faces an uncertain economic future. The top economic advisor to the administration has advocated a significant change, raising concerns about the intentions behind these actions. Weaponizing the dollar and pushing Saudi Arabia away. The value of the US dollar has historically been backed by the full faith and credit of the US system. However, recent actions have transformed the dollar into a geopolitical tool to wield power and influence. The alienation of Saudi Arabia, a key player in the petrodollar system, and the perceived vulnerability of other nations have prompted concerns about the future of the dollar's status as the world's reserve currency. The trust factor, gold and blockchain. Trust in the global financial system has become increasingly precarious. However, the adoption of a gold-backed currency by the BRICS nations, combined with the transparency and immutability of blockchain technology, offers a potential solution. The issuance of a gold-backed currency and its verification through distributed ledger technology could restore trust in a financial system plagued by doubts and uncertainties. The implications of the reset. A potential currency reset by the BRICS nations could have far-reaching consequences for the global economy and the dollar's value. If countries decide to shift to a gold-backed currency, disassociating from the dollar, there could be a massive influx of dollars back to the United States, leading to inflation and soaring interest rates. Such an event would create a villain, redirecting blame away from the Federal Reserve and the nation's economic policies. The financial system under strain. The global financial system faces significant challenges given the suppressed interest rates and easy money policies implemented since 2008. The possibility of interest rates spiking could trigger a banking collapse and exacerbate the existing financial distortions. A reset of trust and values. The impending reset could serve as an opportunity for countries to re-evaluate their financial trust and align themselves with more stable and transparent systems. The U.S. administration's advisors' positions, advocating for the removal of banks and the reserve currency's shift, raise concerns about the country's financial future. Conclusion. As the world awaits the BRICS nations' potential announcement of a gold-backed currency, the financial landscape remains uncertain. A currency reset could significantly impact the global economy and the dollar's value. Understanding the implications and potential consequences of such an event is crucial for individuals and nations alike. The current economic climate demands careful consideration and preparation for a rapidly evolving financial environment. The Global Currency Reset, Unveiling the Impending Financial Crisis. Introduction. In this crucial emergency podcast number 5, we explore the potential for a global currency reset and its far-reaching consequences. Our expert guest, Andy Schectman, sheds light on the dangers of the current financial landscape and the importance of being prepared for what lies ahead. As we delve into the intricacies of weaponizing the dollar and the potential reset, it becomes evident that we must take proactive steps to safeguard our financial future. The implications of a currency reset. A currency reset entails a significant increase in interest rates, leading to an implosion of stocks, bonds, and real estate, all of which have soared to high valuations in the current economic climate. The alarming debt-to-assets ratio of the United States, along with excessive money printing, raises concerns about the stability of the global financial system. The weaponization of the dollar. The US dollar, once a symbol of financial stability, has transformed into a geopolitical tool used to wield power and exert control over other nations. The potential pushback from Saudi Arabia and other nations, along with the rise of the BRICS nations, could challenge the dollar's status as the world's reserve currency. The BRICS nations and a gold-backed currency. The BRICS nations, Brazil, Russia, India, China, and South Africa, have been increasingly acquiring gold, signaling a shift away from traditional financial systems. A gold-backed currency, combined with distributed ledger technology, blockchain, offers a potential solution to restore trust in a global financial system plagued by doubts. The role of gold and silver. Gold and silver have historically served as safe haven assets, protecting wealth during times of economic uncertainty. Despite the ongoing financial challenges, many people continue to save in dollars, unaware of the potential risks and devaluation of their savings. The looming threat of inflation. Inflation continues to be a growing concern, with the purchasing power of fiat currencies steadily eroding. The influx of trillions of dollars held in reserve into the global financial system could lead to even higher inflation levels. The role of regulators and trust in financial institutions. The lack of oversight and risk management in financial institutions, as evident from the example of Silicon Valley Bank, raises questions about the credibility of regulators. Investors must question the trust they place in banks and central authorities and take personal responsibility for safeguarding their wealth. The importance of precious metals. Precious metals, particularly gold and silver, offer a proven hedge against currency devaluation and economic turmoil. With the potential for a global currency reset on the horizon, allocating a portion of one's portfolio to precious metals can provide stability and protection. Conclusion. As the world braces for the possibility of a global currency reset, individuals and nations must face the reality of an uncertain financial future. The excessive money printing, rising debt, and geopolitical tensions have created a perfect storm that demands careful planning and preparation. Embracing the role of precious metals in wealth protection and diversification is a prudent step in navigating the challenging financial waters that lie ahead. Staying informed, proactive, and financially literate is paramount to safeguarding our financial freedom in the face of economic uncertainties. The impending financial crisis, unraveling the security shortfall. Introduction. In this critical podcast, we explore the troubling signs pointing towards a looming financial crisis. Our guest, Andy Schectman, president of Miles Franklin Precious Metals, provides valuable insights into the challenges facing the global economy and offers suggestions on safeguarding one's wealth. From the vulnerability of government pensions to the potential consequences of a currency reset, this discussion sheds light on the need for proactive financial planning. The unsettling shortfall, $70 to $80 trillion. The combination of government military pensions and Medicaid liabilities raises concerns about the precarious financial situation. Off-balance sheet liabilities further exacerbate the security shortfall, with most of it owed to the U.S. public. The role of gold and silver. Amid the financial uncertainties, gold and silver emerge as safe haven assets, protecting wealth against currency devaluation and economic turmoil. The continual devaluation of the U.S. dollar makes precious metals a sensible and attractive investment. The potential currency reset. A currency reset is a significant increase in interest rates that could lead to an implosion of stocks, bonds, and real estate. The excessive money printing and rising debt levels increase the likelihood of a global currency reset. The weaponization of the dollar. The U.S. dollar has become a geopolitical tool utilized to exert control and power over other nations. The rise of the BRICS nations poses a potential challenge to the dollar's status as the world's reserve currency. The BRICS nations and a gold-backed currency. BRICS nations, including Brazil, Russia, India, China, and South Africa, have been acquiring gold, signaling a shift away from traditional financial systems. The concept of a gold-backed currency backed by distributed ledger technology, blockchain, gains traction as a potential solution. The looming threat of inflation. Inflation continues to be a growing concern, eroding the purchasing power of fiat currencies. The influx of trillions of dollars held in reserve into the global financial system could exacerbate inflation levels. The role of regulators and trust in financial institutions. The lack of oversight and risk management in financial institutions raises questions about regulators' credibility. Investors must exercise due diligence and take personal responsibility for protecting their wealth. The bail-in conundrum. Bail-ins entail depositors becoming unsecured creditors of a bank, should the bank face insolvency. With the potential for bank consolidations and potential bail-ins, savers could suffer significant losses. Conclusion. As we brace for the possibility of a financial crisis, individuals must recognize the importance of diversifying their investment portfolios and protecting their wealth. Precious metals, particularly gold and silver, stand out as reliable assets that can shield against economic uncertainties. Engaging in thorough research, seeking trusted advice, and considering secure storage options can help navigate the challenging financial landscape ahead.